So Chairman Mayton, if you'd like to call the meeting to order. You can proceed.
Sure. All right, let's call the meeting of the Audit Review Committee to order. Our first order of business is to, first of all, I guess a roll call, let everybody know, see some new faces. So let's go around and introduce ourselves. I'm John Mayton. I'm the chairman of the Audit Committee. I've been the chairman for, I don't know, 15 years, something like that. Nobody's fought to take it away. So I retired from GM 2 years ago after 42 years working in engineering for GM. So I don't have an accounting background, but I've been involved with several organizations and stuff where I've had to take care of the books and that. So I enjoy this because I get to see the city finances and go through them in depth every year. So Tony, I think we all know you, right?
Yeah, I'm Tony DeCamp, Assistant Finance Director for the city. Been here almost 13 years now. So cool. I don't know what order or whoever wants to go next.
Tony, just in our order of business, you do need to say where you are. So Royal Oak, Michigan, or Oakland County, Michigan, either city or county, please.
It's just for voting members.
Okay, so each voting member needs to say where they are.
Technically, it's only if
Yes.
individuals that are not in Royal Oak. You specify where they're.
But are you talking about residents or what your residents are, or where we're taking the call from?
Where you're taking the call from.
Okay. So let me say, I'm John Mayton. So I'm actually in Presque Isle County up north right now, but I live at 2902 Elmhurst in Royal Oak.
Okay.
And I am in City Hall.
Okay, Mayor.
Hi, good evening, everyone. Mayor Mike Fournier here, returning. I'm actually the substitute, second string for Commissioner Lavasser tonight. I don't know if you guys are aware, yesterday around 3 or 4 o'clock, Commissioner Lavasser submitted his resignation. And so we had a meeting last night at the City Commission and we accepted his resignation, which means, obviously if he's not part of the City Commission anymore, he's not a member of the Audit Review Committee. So I'm here as his alternate and I am in Manatee County at the moment.
Okay, Julie.
Hi, I'm Julie Rudd. I'm the Finance Director.
Okay, Nate.
I am Nate Balderman, the auditor with Raymond.
Paul.
Thank you, Mr. Chairman. This is Paul Brake. I'm the city manager and have been here about 6 months.
Okay, Zane.
Good evening, everyone. My name is Zane DeLand, and I'm physically located in Royal Oak tonight.
So Zane, you're new to the committee then? What's your background?
Spent about 6 to 7 years in public accounting, doing a lot of governmental type of audits. And then the last 2.5 years, I've been the corporate controller for a tier 1 supplier to the big 3.
Okay, very good.
Welcome,
And yeah, welcome.
Thank you.
I'm sure you'll find this meeting thrilling. It's let's put it this way, it's a lot shorter than when I started. I think these are about 4 hours long when I started, and we've made some progress. So Melissa.
Good evening, everyone. My name is Melissa Patel Solis. I joined the committee last year. I was in public accounting for about 5 years and currently at a Fortune 500 company for the past few years, in audit as well. So I'm located in Royal Oak, Michigan tonight.
Welcome, Melissa.
Thank you.
By the way, good evening, John. Good to see you again.
Oh, thank you.
I feel like the qualifications of everyone here far superior to me. So I'm going to sit back and just keep my mouth shut and not try to interfere with all the good work that clearly the people with the most expertise have tonight.
Yeah, and I will say, one reason that these have been a lot shorter is because of the preparation that Nate and the finance team have done. And part of that is getting stuff done ahead of time and sending out the CAFR and such ahead of time for us to take a look at. In, I'll say, the old days, we went through a lot of lines of stuff because that night was the first night that we saw them. So I want to thank them for the previous years of getting us to this point where we can run this meeting very efficiently. So the next thing on the agenda is public comment. This isn't like a controversial city commission meeting where we have people lined up at the mic. Is there any public comment? I don't see any other.
Chairman Mayton and members of the Audit Review Committee, there was no public comment called in this evening.
Okay, thank you for that. So we'll move on to the next order of business, which is a selection of the chairperson. So I'll open the floor for nominations for the chairperson for the committee.
I'll nominate John Mayton as chair.
I will second that.
Okay, so John Meade has been nominated and seconded. Are there any other nominations? Hearing none, I'll call for a vote then. All in favor of John Meade as chairperson, please raise your hand. Say aye. It's the easiest way to do it. All opposed? So unanimously passes. I'll be chairperson for another year. So the approval of the agenda, just need a motion for somebody to go ahead and approve the agenda.
I will
I
move.
approve the agenda.
Okay, so we've had it moved and seconded, moved by Melissa, seconded by Zane. How's that? To accept the agenda. Any discussion? All in favor, say aye, raise your hand.
Aye.
Opposed? Okay, agenda is approved. So move now to the approval of last year's minutes. And this is another thing that Tony's done a real good job on. We asked before to have the minutes published quickly after the meeting so that we have our memories, so that we don't wait a year before we try to do it. And I think he did that last year, and he's put those out. So are there any comments or a motion to approve the minutes from last year?
I'll motion to approve the minutes from last year.
Okay, Zane so moves. The
I'll
second.
second that.
Okay, Melissa second. Any discussion? Okay, all in favor, say aye. Raise your hand, yes.
Aye.
Okay, those opposed? So that passes. Okay, so the next thing I will do is turn this over to Nate for the audit presentation from Riemann. I know there are some circumstances that we just got the email today about. So maybe before that presentation, Tony or Julie, do you want to explain the email that went out today?
Sure. So as I had stated in the past, the management letter was typically provided, once everyone got to the meeting in person. So that wasn't going to happen. So I went ahead and got that out. And then the yellow book report that is typically contained within the single audit couldn't be sent. Well, it wasn't sent with the single audit as the single audit is delayed. So basically, we are eligible to receive some of the CARES Act dollars from Oakland County, and there was some confusion, or I guess just uncertainty about whether that revenue, the federal revenue that we are going to claim expenditures. So we're using expenditures from fiscal year 20 and whether or not that needs to have revenue accrued back and therefore have single audit procedures done on that revenue was still up in the air. For instance, the situation with the state of Michigan, the award was technically made in July. So therefore, even though we're using expenditures from fiscal year 20, we will not be accruing the revenue back to fiscal year 20. With the county, it was uncertain as to the same, whether it would be the same approach, or we had a letter, I think it was called a letter of agreement, that was provided and signed in June. So it was possible that we would be accruing it back. However, further communication with the county kind of made us unsure as to how they were approaching this, whether or not they considered this funding to be allocated to us, or whether or not it was technically awarded, or I guess as of June 30th. So Nate and other members of Raymond have, I believe, been in contact with the audit team for the county, or I guess I'll let Nate speak to that. And part of the other issue with this is with the single audit was whether or not we had to accrue this. The guidance that still has not been issued on what the auditors are required to do to audit these funds. So if the revenue is to be accrued, then they would have to audit the funds for this single audit. However, there hasn't been guidance issued as to what they are to do. So couldn't be done at this point. Nate, if you want to go a little more in depth, or fill in.
Yeah, I can go in some more depth. And if it sounds clear as mud, that's exactly how it's been and how we've been operating in the audit world for the last several months. Like Tony said, the state funds, even though you have expenditures that you're going to be claiming for reimbursement from fiscal year 20, the state guidance was very clear, and it was very apparent initially, and decided very early that that wasn't going to be recognized. I guess there was some question of, since you knew the expenditures were there, would you have to claim them even though the revenue couldn't be recognized? And ultimately, the decision has kind of come down that it has not, or that it would not be. But the county was, again, more unclear because of what constitutes an award. That's part of what it comes down to, of when actually was the award date. There was communication, there was information sent by the county. The city had to sign an agreement at that point, and the city council approved it way back in June. And like Tony said, we then found out that it wasn't signed on their side till after, which seemed unusual. And so, we've been, we have one of our partners is also a member of the AICPA's Government Audit Quality Center Executive Committee. He's been working that side, asking some questions, also has some other contacts with some people at the county. And ultimately, we may end up talking to the auditors as well, but their audit hasn't started. So we're not sure where they're at with that to determine when this is going to be recognized and when it needs to be audited. The audit supplement for COVID-related funding is, it's like any supplement that comes out for the audit guidance that they give out. They give dates, then they come back and they delay, and then they delay some more. And so we're at that point right now where we're in that time frame of, if we end up having to audit this, hopefully we'll be able to audit it relatively soon. They said, they've had several dates. It started back in September when they expected it. Now the last date I had heard was late November. but we're pretty much there. So I think there's a lot of things still being worked out, and some of it even goes back to a lot of on this CARES fund. It's the Coronavirus Relief Fund, the funding that's been passed through. Some of the confusion has even come on there's been questions going back and forth between the AICPA and the OMB that oversees these funds. We're getting into little detail here, but from our perspective, and the questions that have been going out is there was an executive order by the president that said that FAQs and certain other guidance doesn't have any legal standing. The problem is that's kind of what the only thing that's really out there that gives much of any kind of detailed guidance are those types of documents. So the questions are still going back and forth on what legal standing do those have? Are we supposed to rely on those for our audits? And I'm guessing that's part of what's still happening. So, and meanwhile, the deadline for spending all this money is December 30th. So,
Okay, so let me just try to summarize them. So what we're reviewing tonight is the audit for the 1920 financial year, and it would not include auditing of any CARES Act expenditures.
so it doesn't. So what we have before you is a report that's a draft, because with an inclusion of that funding and recognition as revenue, based on at the point that we were getting the draft ready, that's what we thought was most likely to happen. We've got some more information since then. So I will point it out to you when I get to that point. There may be an adjustment to, and I think it was all recognized in the public safety fund, the revenue and the receivable, that might be adjusted out, because that was a late adjustment that got added. It might have to come back out, depending on the answer we get on this. The other thing that's then held up is usually we talk about the single audit, the federal awards audit piece of things, and that is not complete because of all of this. We've completed the work for what we thought was going to be the only major program, and if it comes back that we're not going to audit this and we can make that final determination, we'll proceed and we'll be able to issue both reports. But if it ends up that we have to record it, we'll probably issue the financial statements first without that, and then we'll issue the single audit at a later time once the guidance comes out and we have a chance to do the additional testing. So it's kind of right now we're in that fact-finding side of things as well, trying to determine what the appropriate accounting and what the appropriate what audit we're actually going to be able to issue in final form.
Okay. So we'll talk at the end, and I guess what that means if you end up tonight approving or accepting the draft with that caveat of awaiting that ruling or guidance, right? I'm just trying to understand what our end game is today with that hanging over us.
Yes, I think that would, as long as, again, we're prepared to proceed, we can point out those things that might change. And then from there, we do have the yellow book report, which is the report on internal controls that's usually included with a single audit. That has to be issued when the CAFR gets issued. So we have that document as well as a management letter. So.
Okay. Well, why don't you go ahead then with your audit presentation, and we can, you can point out the areas you mentioned.
I'm going to go ahead and share my screen. Hopefully this allows us to kind of walk through things. Just making sure you see the report. I'm actually going to change pages, but you do see my screen at this point.
Yes.
Okay.
Yeah.
So this is the comprehensive annual financial report just walking through, I think all of you were actually here last year, weren't you? Zane, I think you even attended for fun.
If you want to call it that.
So, kind of my approach is just kind of walking through the sections, talking about some highlights. But definitely stop me if you have questions, or you can also, move me along if you want me to move past any sections or whatever. So I guess I should also start with the audit itself. We talked about where things are at. I mean, we're pretty much ready to issue, other than that one fact being decided. It's been through our review process. This year's audit was performed completely remotely, so we weren't on site at all this year. Worked with the city and getting information electronically. Thank the city, thank Tony, Julie, and the team for providing all of that information to us. Our firm has kind of taken the approach, and especially during the fall of, our industry is governed by has always been governed by the orders and everything that was out there of, unless absolutely necessary, considered to be essential, that we weren't going to be doing things in person just to keep everybody safe. We had followed that, and it seemed to work fairly well, although I will say for sure I'm ready to be back in person and doing these audits closer to what they normally are. So, but it didn't impede us from being able to do any of the procedures that we normally do. There really was no change in the procedures that we did, other than following up on changes and procedures that the city might have had as a result of any changes that they had. But there were some procedures related to that, but nothing major in terms of having an effect on our procedures or the overall audit. So the CAFR itself is a large document with, I guess, just looking at the table contents. The major sections are the introductory section, which includes the letter of transmittal, the GFOA certificate, which you did get the GFOA certificate for last year's report. The way it works is you include the GFOA certificate from the prior year. They give comments on the report that have to be considered in the audit or in the financial statements for the next year. And so we've considered all of those items, even the very piddly ones. There are some that are very, very minute type issues on very small issues, but those have all been considered, and then management Tony and will work. I think Tony gets to put together the responses back to the GFOA on each of the items when he does the application. And then the actual changes have been incorporated within the document. So you should, but we fully expect you will get the GFOA certificate again next year. The financial section and the introductory section, just to point out, is not audited. The financial section is where most of our procedures are focused from an audit perspective. Obviously, we produce the independent auditors report. That's our portion of the report. Management's discussion and analysis is considered to be required supplementary information. We don't technically give an opinion on that. We look at it for consistency with the rest of the report, but it's information based on AICPA guidance that we do not give an opinion on. Then the basic financial statements that you see listed here is the focus of our procedures, is everything within those basic financial statements. So all your government-wide statements, your fund statements, which we'll go over in a minute, and the notes to the financial statements. And then directly following those is, again, more required supplementary information that we don't give an opinion on. And then the combining and individual fund financial statements and schedules is the next section. These are all the more detailed reports for your non-major funds, those types of things. That is, we give what's called an in relation to opinion So we're looking at those, but only at the like materiality levels, those types of things, that the basic financial statements at that higher level is where we look at those amounts. And then the last section is the statistical section. And again, that section is unaudited as well, but that's where you have all of your trend information, 10-year trend information, those types of things for your report. I'm just going to walk through. There's nothing specific I wanted to highlight in the transmittal letter. Is there anything, Tony or Julie, that you wanted to point out in that?
Nothing for me.
Okay. The financial section, then, the independent auditors report is technically the only piece that's ours. Kind of what basically talks about in terms of whose responsibility for what is in these paragraphs here. And then the actual opinion is on this page. It will be a clean opinion when we issue it, or an unmodified opinion. So which is what you would expect. But the rest of the paragraphs talk about, like, the required supplementary information paragraph here talks about what's going, or the fact that we don't give an opinion, that type of thing. And then the last section here talks about, because of the single audit requirements, this audit is performed under government auditing standards. And this references that other report, what we call the Yellow Book report, for the internal control report that we issue, that's required under government auditing standards. And we'll go over that. That's what Tony sent earlier tonight, or late this afternoon. So management's discussion and analysis, by the name, it's written by management. This does have some good information if you want to read something in the report. It's probably the only place that you can actually go in and read anything. Some pretty graphs and charts. There is a section in the report that talks about, if there is one, the place that I point to people to, where most of the good information. There is some discussion on general fund budgetary highlights within this document. A chance for management to kind of explain what happened during the year, what happened with the budget. This is a place in some cases where management, what I've seen this year in a lot of different entities that I've looked at, there was a lot of uncertainty coming up on the June year end of what was going to happen, and there were things even that happened after year end that affected the financials, where there's a chance to explain some of those types of things. And then if you go to
the finance position on the parking fund, that's been adjusted per the comments that were made in the significant audit adjustment letter.
Yes. So so the one comment we did have, we'll go ahead and cover that right now. The one comment we did have in our internal control report, there was a audit adjustment that was required, something that was found where it was discovered that there was a disposal of land that hadn't been recorded. That did get recorded, so that's included in the response and corrective action, that it's already been taken care of, but that did get recorded and adjusted in the financial statements. But it wasn't initially detected. It was kind of a different arrangement in how that was set up, with the DDA paying for, or helping pay for, the property, and there was an agreement in terms of what they would get back when if that property was ever sold or used, and revenue was generated from that. But that was all recorded. We looked at that document and that agreement, and that was recorded properly once this adjustment was made. And really the funds were in the right place. So the revenue was there. It was just the asset hadn't been removed, and there was some reclassification that had to happen because when going through that in the parking fund.
There's also a comment though about revenues were overstated by 600,000.
So so the amount was initially included just as another revenue, I believe is where it was, Tony, right? And we had to move it to,
so basically, so the property that it was sold, it had been part of, when it was purchased, it was 2 different parking lots were purchased. And through that purchase, it was added to the capital assets, and it was added as one asset, but it was sold off as separate, 2 separate pieces. And so the smaller piece was sold. We still retain the larger piece. It's actually the parking lot on 6th Street, just at 6th and Main. And then that we retained. The one at 7th and Main was sold. And when it was sold, when the proceeds came in, the treasurer recorded them in a revenue account. And there was never the disposal of it, which then would have, had it been done in a timely fashion before the audit started and it was found through the audit, it would have basically wiped out that revenue that was recorded because of the loss on the disposal. It was sold for less than we purchased it for. And of course, being land, there was no depreciation on it. So we had to recognize that loss. And being that it didn't happen until the audit, then that becomes essentially why it would be a finding, as opposed to had we have made that recording before the audit started, then would have been no issue.
Okay, but it says it was detected and corrected in it, but the purpose of internal controls is to also make sure this wouldn't happen again. So is there anything different that we would do to make sure that this doesn't happen, or a procedure that would prevent this from happening in the future?
Yeah, so basically, instead of recording it in a revenue account, like if we have any disposal of a property, any sale of capital asset of any sort, instead of recording it in a revenue account so that it gets recorded, we'll be sure to communicate with the treasurer to make sure any receipts are recorded in a gain/loss on disposal of assets, which then at the end of the year we'll be able to, if it hadn't already been taken care of, it will stick out because we'll be able to review whatever's in gain or loss and make sure that that was processed fully. And instead it was in a miscellaneous revenue account, unfortunately, just to get it recorded, and it was missed. So.
Zane or Melissa, do you have any comments on this? I mean, I'm looking at this as a non-accounting kind of person. It just seemed really odd to me.
Yeah, I mean, I think what Tony said does make sense. And I guess, like he said, the internal controls, I think you just need to make sure that it's recorded properly in the correct account next time in that gain loss category.
Absolutely.
I think my only thought would be beyond the instructions to the treasurer's office to record this as part of a gain loss revenue account. at the end of the year closing before the audit, a review of that miscellaneous revenue account, because it's typically a place either on the expense or the revenue side where some things can get misrecorded to. And
Yes, that makes sense.
yeah, and as you said, it did stick out. So I think a quick recording or a quick review of those accounts as part of your year-end closing procedures could help to identify anything like this in the future.
Absolutely.
Okay, yeah, I agree. I know I've been involved with a lot of nonprofits, and whenever we have anything on a miscellaneous revenue line, it just sticks out like a sore thumb. And we were told by the accountants, make sure you have, explanation, detailed explanations and memos for each of those. So that sounds like a good suggestion.
Yes, thank you.
Okay, Nate, I think we can move on then.
Okay, all right. Well, we've covered the Yellow Book report. Just so that would take care of that. We didn't have any other findings in this report from the financial reporting side. So, and just so you know too, it won't change in terms of the accounting for the revenue. Again, just in case there's any question on that, the accounting for that grant revenue, it's enough up in the air that nobody knows how it's supposed to be recorded in management. I mean, part of the reason that it came up was, how it was going to be used was determined kind of later in the game. But this is what we're seeing all across the board because there's so little guidance on everything.
Yeah, just to build off what Nate said. So I guess knowing that the guidance was so delayed, our plan was to use, so basically the majority of this grant revenue, the expense that we'll be submitting for reimbursement is going to be largely public safety payroll expenses. And our plan was to use July just to avoid the issue we're having now, to try to make sure that we didn't have to worry about accruing it back to a fiscal year the fiscal year under audit, and then thereby requiring the program to receive a single audit on it, knowing that we didn't have guidance. Unfortunately, the county let us know that they were not going to be accepting payroll past June 30th. And that didn't become clear to us until I think during audit, as it was while the audit was being performed. So then we realized that we would have to use fiscal year 20 expenditures, and now we are where we are. So.
All right. The next section of the report is the government-wide financial statements. You will see in this report that this first page is a statement of net position. This is on the full accrual basis of accounting. I love being at home. I'm not sure if you hear the dog in the background, but somebody just arrived at my house. So for the governmental activities column, that's primarily all your governmental funds that throughout the year, the city, and we have separate funds on the modified accrual basis. This is on the full accrual basis. You'll notice in this a large unrestricted deficit that is caused by a combination of factors, but primarily it's the net pension liability for the unfunded portion, the unfunded liability for your pension plan, as well as the OPEB plan. But in addition to that, because the city bonded for the closed plans a few years ago, it also, the impact of that prior unfunding actually also factors into that, in that that's not capital related debt, though that debt is included in the long-term debt. So it also factors into that $155 million unrestricted deficit. So pretty common at governments to see that, but just point that out because that's the reason for that large deficit. And then the statement of activities is over the next 2 pages and shows the change in net position for the year. So governmental activities decreased by about 3 million. And then the business type activities, which is basically all your enterprise funds, increased by 1.1 million. The actual fund statements start on page 34 here. You'll see here the 3 major funds for the city are the general fund, the public safety fund, and the city capital projects fund. And I can point out here, this is where in the public safety fund, that 1,298,000, most of that is related to that funding from the county that right now is accrued. So if it comes back that it shouldn't be, that's the number that would decrease down. And then a big part of why this fund balance is higher, is up at 2.5 million, is because of that receivable at year end. Your total fund balance for the general fund at the end of the year in this first column is 15.2 million. And that's there's a certain amount in that fund that's restricted for the PEG fees of 1.2 million. There's some assigned fund balance there for payouts, and then unassigned fund balance at year end is 13.6 million. The next page is a reconciliation that really just basically takes what your fund balance is, gives you all the things that are different between modified accrual accounting and full accrual accounting, so that you can reconcile between the 67 million that's shown as total fund balance for all your governmental funds and what the actual net position is on that full accrual statement at 72 million. This next page is your income statement then for those major funds and your non-major funds in total. And you'll see here the federal grants of 1.3 million is where, again, that number of it about it's about 1.2 million is the accrual that's included in the public safety fund at year end for those CRF funds that are included there. Regardless, the expenditures related to that are included in public safety expenditures. There's no change in how the expenditures will be reported. It's only in the actual recognition of revenue. So you can see here the results for each one of those funds. The public safety fund, this is typical. Basically, the way the public safety fund works is you have the millage and other grant revenues, those types of things that come in. And then all public safety expenditures are recorded here. And then there's a transfer that's then required each year for the general fund to supplement what the millage is, because the millage isn't enough to pay for everything. But that's how the city is elected to record this, is to record all expenditures for public safety, or the majority of them in this fund, and then do the transfer to supplement it as needed. And again, this number was much closer to a break even for the year until this accrual was done. Again, this is another statement that reconciles the net change in fund balances for the year of 22 million to the actual net change in net position of almost $3 million loss. Page 38 here is the budget to actual statement for the general fund. And you can see, and we have one as well for public safety fund, but this gives the original budget for the year in the first column. That would have been what was adopted before the beginning of the fiscal year. The final amended budget is this column. So what was adopted as of right before June 30th, the end of the fiscal year, and then the actual results is this third column. And then you have a similar statement for public safety. The next statement, go ahead.
Nate, so on the public safety then, so the difference, the final budget and the actual majority of that is that 1.4 million, whatever, or 3 million that we expect to get back?
Yes, it's one of those where, and a lot of this was, and again, we see it all over the place this year more than most, where there was so much happening after year end. Guidance coming out, obviously not all guidance is even out yet. It adjusted a lot of cities' plans on how they were going to spend money, what they were going to use the money for. There were adjustments made late to state aid, state revenue sharing, that type of thing, that all came into effect that wasn't known at year end. So this is one of those items where this is where those expenditures occurred. So that's where the revenue would be recognized. I'm sure the city probably would have adjusted, or they could have potentially adjusted the transfer that was being made from the general fund if they needed to at that point. But by the time, the transfer had already been made by the time the decision was made on using 2020 expenditures for that they were going to use those expenditures to claim for that federal grant. So you can also see here, the budget reflects that as well. On the revenue side, that was not budgeted for. There was only 28,000 budgeted for revenue, and you're at 1.3 million. So.
Okay.
These next statements are the fund statements for your enterprise funds. Your two major enterprise funds are your water and sewer fund and your parking system fund. And that parking system is the fund that we were talking about, where there was that initial misstatement where there had to be an adjustment. And so you can see in this fund as well, the ending, wow, that's really small. I'll zoom in a little bit. So this first column here is the water and sewer fund. You can see the ending net position is 78.2 million. You actually have an unrestricted deficit in that fund. I will point out for purposes of the state of Michigan, what's required to have a deficit elimination plan. You are not required to have a deficit elimination plan for this fund, because you have a net, you're net positive in what they call working capital. It might not technically be working capital as defined under what everybody's used to, but basically it's current assets compared to current liabilities. And as long as that's positive, the state does not consider that to be an issue. And basically what it comes down to is, again, just like I talked about on your governmental activities showing the unrestricted deficit, this deficit is also largely a result of that net pension liability, the net OPEB liability, and the bonds that are outstanding that were issued for that debt all contributes to that. So it's a long-term liability that you're going to have to pay eventually, but on full accrual accounting, that causes a deficit in this area. So, and then the parking fund had a positive balance also in unrestricted. So there's no issue there. And showing a total net position of 19.2 million. I won't dig into the statements too much, but there was also, is it also an enterprise fund, Tony? Was it the recreation fund? Also shows a deficit, but it has kind of the same situation. Where
Exactly.
it won't require deficit elimination plan either, so. There is a small reconciliation where there's internal service activity that in the elimination part for internal service funds, there's a balance that comes over for business type activities that gets added to the net position of enterprise funds. So your net position is actually 108.1 for business type activities. And then this next page, page 50, is the income statement for these funds. You will see for the parking fund, just kind of as a matter of where this revenue was initially recorded, it would have been up in charges for services or something like that before. And what it ends up doing is showing up as that loss on sale of capital assets down here. So the asset was recorded that had to be eliminated and netted against what was previously recorded as revenue to come up with this loss. So the internal service funds, just so you know, this has a single column here, but there is combining for several activities that are run through internal service funds. But I'll point those out here in a minute. Here's the cash flow statement for the water and sewer funds, or for the enterprise funds and the internal service funds. And then the one thing just to note here, this is the fiduciary funds. Included in this, you have a single column for the pension and other employee benefit trust funds. This is a single column here. There's combining statements in the footnotes that break out the different specific funds. And you have the agency fund. I know if you remember last year, we talked about GASB 84 and that was going to be required to be implemented in the current year. In the midst of the pandemic, the GASB, just like I believe the FASB as well, and several other standard settings bodies, even on an audit requirements, delayed the implementation date on a lot of standards, including GASB 84. So the city elected to delay the implementation. We'll be implementing next year instead. Just one less thing to try to deal with, implementing in the midst of everything that we were trying to deal with the audit. So, but that will be required to be implemented next year. So you won't have agency funds anymore. You may have custodial funds, but the actual agency fund will no longer be there, and there will be if there is a custodial fund, there will be a statement similar with the additions and deletions, or additions and deductions for that fund as well. For the custodial fund, that's one of the new requirements. So, but some activities may move into other funds. It just kind of depends when the city goes through and does the analysis.
And they just looking at the net change in fair value investments is, down 600,000. Is that because this is a June 30th snapshot and stuff is much better since then, or is there something else that drives that?
Yes, I mean, that's a big part. It's a snapshot. So in time, depending on when the actual, what it was as of a specific point in time. And so it's the ebb and flows. That's a little bit of with the pension fund and the OPEB fund. And it really depends on the mix. I think there's actually some funds that had a positive and some that had a negative. Just the mix of fund also has an impact on that as well. Is
there anything going on with refinancing any of this debt at current rates. I don't know if that's helpful or not.
No, we don't have anything callable right now. I think the end of next calendar year is our first opportunity.
I will say in general, there's been a lot of bond activity for a lot of other entities. A lot of governments have, a fair amount of governments have been going through it when it's available to them.
And Nate, isn't advanced refundings taxable now? I think a couple of years ago, they made advanced refundings taxable.
I believe that's the
Thank you,
case.
Lance.
Yes. Yeah. I know it's something that you hear about all like at the GFOA level, that kind of stuff, where they continue to, that's where their constituents are lobbying to try to get those types of things changed if they can. But that has had an impact on things. These statements are full accrual statements for each of the 3 component units of the city. So the Tax Increment Financing Authority, or the TIFA, the DDA, and the Brownfield, each are funds or component units of the city. And this again is a full accrual statement for those. There are combining statements for these in the back because they're kept on a modified accrual basis and then brought forward to a full accrual for government-wide purposes. The notes start here on page 52. There's, for the most part, things are the same, and I'm going to do this and apologize my scrolling. I hate scrolling when we're going through a document. If there's any specific notes though that anybody wants to talk about, I'd be happy to stop at any of them. So feel free to, if there's anything you want to look at. There are pretty extensive footnotes on the deposits and investments of the city. The capital assets, here's where all the long-term debt, more detail on the debt of the city. You can see here, if you're looking for those debts related to the pension and the OPEB bonds, those are each included within here. So the balance of the OPEB bonds at year end was 85.6 million. The portion related to governmental activities, there's also a portion recorded for business type activities, and the pension bonds are the 14.6 million. And then you can see here, same thing, 9.6 million for the OPEB bonds and 3.8 million for the pension bonds, and business type activities are those enterprise funds.
And part of the reason, I just like to point out, part of the reason that we don't have any callable bonds right now is our debt was either recently issued or recently refinanced as it is over the last 5 years or so. There's been quite a few refinancings. So yeah, that's something that Julie's always monitoring. And just to add on to that, the George W. Kuhn drain would be the exception. Those are issued by the county, and it's they would be the entity to refinance them. I know, pretty sure, yeah, some of the were refinanced at one point, but many were not. I think they just got really good rates in good timing when they issued the first time. So But again, we don't have control over those refinances.
I had one quick question on the parking system bonds. Are those payable simply from revenues of the parking system, or is there a triggering event where the governmental activities or the general fund would have to cover any of those if revenues don't generate enough to cover the interest and principal payments?
The latest two bonds we sold were revenue bonds, and the general government or the general funds were not committed at all whatsoever. But we still have some bonds on the older facilities, and they are general obligation bonds. So the general fund monies are obligated for those older structures. So we do have a commitment from the DDA to assist if revenues are short on those on the revenue bonds. Actually, I believe it's actually only one of them. I think it's the 2016 series. I'm not sure. I'm not 100%. So they do have an agreement with the DDA. Does have an agreement with the city if there's a shortfall.
All right. Note 9 is related to all the risk management activities, different self-insurance funds. There's disclosures for general liability, workers' comp, and healthcare. These are each of those has an internal service fund that report those items.
If I could just go back briefly to the debt question. I just wanted to check and follow up. So at year end, we had just under 6 million. I'm sorry, just under, well, 6.7 million that was general obligation, or that the general fund could end up being on the hook for, versus just under 27 million that were revenue bonds that are strictly the auto parking system.
Great. The notes for the retirement system starts on page 77, and it's very lengthy. The actual valuation is done as of June 30th, 2019. You'll see that disclosed throughout, but the valuation is at June 30, 19, but they do a roll forward procedure to report the amounts as of June 30th, 2020. So it's a matter of, it's a lot easier to get an evaluation done timely when they use the numbers from before and then have the ability to roll that forward to the next year. So that's what they do each year. Current discount rate that's being used is 7.25%. And then you see the footnotes in the footnotes here. The net pension liability assumes there is the requirement for this disclosure. The liability that's actually recorded is at 97.5 million, but the standards do require this disclosure. If that were to be off by 1% and you were only to earn 6.25, you'd be looking at a liability of 124.7. Or if it was better, you'd be looking at 74.6. So there's it's basically the Gatsby's way of saying this is just a big guess. And even a relatively small change, a 1% change, can have a huge impact on that liability. And I guess part of, just to point out a little bit on this liability, I mean, there was some question when these bonds were originally issued. Basically, what it did is it took everything that was a closed plan and refinanced for that. But there is the police and fire was the portion that was not able to be refinanced because it's not closed. And so that's basically what was left in the whole liability. When that refinancing happened, the whole liability that was remaining for the net pension liability, not refinancing, but the bonding for those. So that was all initially recorded in governmental activities. Over time, that the actuaries do give enough information, so the city does look at the calculation and is able to determine, that it is going to a net underfunding again for the non police and fire. So it does start creeping into where it does get recorded in terms of for governmental activities. There's a portion of that that's not just related to the police and fire anymore. It's not huge, but there is a portion that's out there, which honestly, it wasn't unexpected. I mean, that's kind of the risk that you take when you do those types of bondings. And I guess it's not a risk. It's a known though, because it all is based on what the actual investments come in. If it doesn't earn as much as what was originally intended, there's going to be the potential for a liability to exist. So. And that's all the fun of, the new deferred outflows and inflows. The next, starting on page 83, is similar disclosures for the other post-employment benefit plan. This is actually as of June 30th of 2018 that the actual evaluation was actually performed. So it's using the data from that year. But again, it gets rolled forward for OPEB plans. It's frequently can use the data from evaluation for 2 straight years. I believe that's what you do. Is that correct, Tony? You use that valuation from 2 years ago and roll it forward for 2 years, and then you have to get an evaluation.
Yeah, it's only required to have evaluation on the OPEB plan every 2 years. So next year it will be using the 2020 numbers valuation. And then the following year again, 2020, we go to the evaluation.
Yep. So again, similar information, using the same discount rate for that plan as well. And you can see here the liability at year end was 14.7 million. But in the same way, there's 2 different amounts that they look at. What happens if that discount rate is it was 1% higher or 1% lower, and you can see the swing there in the liability. If you actually get 8.25 over the long term, you're almost there funding wise. But the other side of that is the healthcare cost trend rate, and the guesses on those numbers and where that's going to be could also have a huge impact on the liability as well.
A question on the discount rates. So both plans, the OPEB and the retirement plan, are using that 7.25%. I think there is a reducing risk adjustment for the retirement plan, but the risk adjustment for the OPEB plan actually increased to get to that 7.25. And I know it's based on the different asset class and the expected rate of returns on those. And I know we're not the retirement board or the OPEB board, but is there any procedures that you do from the audit side on looking at the reasonability of those two and why there was a positive adjustment and then a negative adjustment in the retirement plan?
Not really any audit procedures. I mean, this is kind of a disclosure that it's not required to be disclosed quite like this, but we've always liked to show, you know, how that target allocation, it's not a, how should I say this? It's not an exact science in terms of you have to use this exact allocation. So, you know, it's in terms of, is it reasonable? I mean, it's hard on this discount rate, honestly, it's kind of, if it's in the range, the ending number, of where most municipals are, you know, there doesn't tend to be a lot of questioning on that number. Again, we're looking at it. I mean, if this number was up at 8%, 8.5%, that type of thing, I think there'd be more question. But 7.25 is reasonable, and it's fairly close to what the state rates are that they require for you to report on. So.
Okay, I guess running some of the numbers, and just guessing here, if we're on the retirement plan, that really was closer to the 8% return that's calculated with the expected rates of return plus inflation. The net pension liability is probably closer, or $17-18 million less than the 7.25. So if I do remember when I was auditing these plans, and yes, it was just basing it on assumptions, and everyone's best guess, which is at times a stab in the dark. Just looking at that could be a very big swing in the net pension liability. And so I'm just wondering, with the pension boards, when they set that, have they ever considered reviewing that to see if that's really a good number? Does that happen on a regular basis?
Yeah, I can respond to that. We do an experience study every 5 years. And I believe it was 2 years ago now, they did lower the assumption from 7.75 down to the 7.25, which was very painful, because that is when, right after we bonded, we became unfunded again. We had that little, when they changed that assumption. So yes, they do look at that. They do struggle with those decisions, because you know, it obviously increases the annual contribution that the city has to make. You know, that comes out of the budget. But yes, they like I said, they did lower it by 0.5%. I believe it was a year and a half ago, 2 years ago. And you know, they continue to focus on that number. I think we're due for an experience study in 2.5 years, I think, our next one, but they've only, again, been doing them every 5 years. Sorry, I will add that both the financial advisors on those boards are advising to expect about a 6.5% average return over the next 10 years. So that's going to be tough. But the overall rate of return for the duration of the plan is still advised by them to remain at 7.25%, and they expect that. So,
okay.
Kind of building off what Julie was just saying, you know, when we look at these money weighted rate of returns that are reported in this section of the notes, just keeping in mind, you know, it's 1 year, so you know, maybe it was a good year, maybe it was a bad year, so it's kind of hard to, you know, really reference the investment rate of return target of 7.25. And then Julie kind of touched on, there are, between the OPEB plan, the retiree health plan, and the pension plan, there are two different money managers, two different companies managing these. So you will see different, you know, target allocations and expected return on those targets. They're completely independent of each other as far as the investments approach goes.
Any other questions on the pension or the OPEB? For the actual combining statements, this is on page 88, the nuance of the standards that makes zero sense to me, but why they decided this. But the combining statements for these funds, for the pension and OPEB, you have only one fund gets presented in the front for pension and OPEB as a combined number, and then they're required to have in the footnotes the combining schedule for each of the individual funds. So this is where you see the detail in note 13 for the pension trust fund, and the amount that's included in the pension trust fund at year end, 149, well, basically 150 million at year end, and 127.2 million for the retiree health trust fund. And you can kind of even see what Tony's talking about. There's some different classification even on how the funds are invested. Some, the pension almost exclusively through the mutual funds and the other investments, and then the others are more split down into actual equities, those types of things in the retiree health trust fund. But again, different investment managers, different approaches.
Also, oops.
You're muted.
Sorry about that. I must have double clicked that. But on the pension investments, I think some of those mutual funds are that investment firms' mutual funds. So they're actively managing the equities within them. So on the surface, it might look like, oh, they're just pulling in some mutual funds and letting someone else do the management, when, truly it's their own SEI. I believe the firm's SEI, it's their mutual funds, so it's equities within them.
It's funny, I look at these in a different light now that I'm the retiree having to draw on my funds. So I look at the city funds in a different light.
Yeah, you might want to stay in fixed income.
Yeah, yes, enough there and other things, but
Page 89 here then is the income statement, and you can see here just just again, it's timing and the specific investments. There ended up being a loss on the retiree health fund this year, and a gain in terms of the change in fair value at a point in time. But that's what they were showing at that point in time. Both of them had a net investment gain for each of those, so didn't lose money on both of those in total, but that was what happened for the year. On top of that, there is disclosure here for the defined contribution plan for those members that are now in a defined contribution plan, and the contributions that were made for that. If you're interested in the calculation of how you come up with that net investment in capital assets, that is included here. There was a tax abatement disclosure related to any tax abatements now. The GASB a few years ago came out with a standard that said not only do you have to disclose and report what you have earned in revenue, but you have to report what you have not earned in revenue through abatement processes. So there is a IFTs. The big ones for most municipals are the industrial facilities tax, where it's items are being taxed at half the rate. And so that's a reduction in revenue for those. And there's specific agreements related to those. And then you also have the brownfield. So not huge dollar amounts overall. Also aren't able to, you don't disclose the actual benefit that would be related to those specifically, but the agreements and the disclosures are there. And then the very last disclosure added this year is just related to the uncertainty with the with COVID-19 on how much of an impact it's had on operations and how it will continue potentially to have a negative impact on overall financial position, but the duration and actual consequences at this point are uncertain. So it's kind of just an uncertainty type note. Again, nothing specific because there really isn't a lot specific with it. And so, but that was added. It's pretty much across the industry. There's some kind of footnote being added to financial statements this year. The required supplementary information starts on page 94. These are ultimately, there will be 10 years of information included in each of these schedules for the retirement system. And there's also schedules for OPEB where you can see over time how the funding on those has been and what the liability is. So you also have disclosures related to what the contributions were.
And Nick, could you go back to one slide? Is that the annual rate?
Oh, yeah. Yes, this is the actual money weighted rate of return for the investments since the standard was implemented back in 14. So you can see there's a lot of swings from year to year.
Yeah, but the 2.94 is as of June 30th, right? That's still 2020. June.
Yes.
Real.
Yep, that was the return for this past year.
Yeah, if you look at the return since that point, we should be making that up.
Yeah. But then who knows what's going to happen between now and June 30th of next year. So wouldn't we all like to know? And then we have less years of information for OPEB because the standards came in a little bit later for those. And that rate of return then you can see here on this page for OPEB, a little bit more steady for each of the years reported here. But this year down at, just under 1% but again, as of a point in time at June 30th. I'm not going to go through each of these, but this is the combining schedules for each of the non-major funds. So there's a lot of funds included, or a lot of funds at the city here, special revenue funds and debt service funds. And then you also have budget to actual statements for each of those special revenue funds. And then also your non-major enterprise funds, the one fund that I talked about, that recreation fund, again, there's that deficit of 857,000. But again, because you have total current assets greater than total current liabilities, there's no deficit elimination plan required for that. Income statement and cash flows for those. And then here are your internal service funds, where your most of this you have information systems fund, motor pool fund, but then these other three funds are your risk management funds where your self-insurance runs through. Then the last year for these agency funds being reported here. And then you have your statements for each of your component units. Then finally, the statistical section, which gives you a lot of information, a lot of trend information for most of these are for 10-year periods. No specific schedule that I would point out for any of these, but if you have any questions on any of them, let me know. So that's the report.
Well, see, the general fund balance always gets the attention, right?
Right. Yeah. The general fund is always where everybody focuses their attention. You can see the trend of that, of the general fund, but it's at that 15 point, let me make sure. Yeah. 15.3 million at the end of the year. So any questions on the CAFR? I just have one other thing to go over. But if there's any questions on financials, let's talk about them now.
So what's in the budget for the 2020, 2021 in terms of what the general fund contribution is going to have to be for the budget? Is it by Julie or Tony? Is there a number of what we expect?
General fund, use of fund balance?
Yeah, I think each year,
Yeah.
right, in the budget, you assume what the fund balance is going to have to contribute
Yeah.
to it.
Yeah, well, actually, we were assuming there was going to be a use of fund balance. However, because of the CARES Act grant, right now we have it at about even. Revenues equal expenditures. So because of the CARES Act grant. So from the state of Michigan, not the county one that we were talking about earlier.
Right, so we're still well above our threshold for where we want to be for general fund.
The target, correct, which is 10 to 25%. However, the reason we do a forecast is because we don't look at the current year in isolation. Because if we didn't have that CARES Act money, we'd be using fund balance. So, our forecast does show use of fund balance in each of the years. So it's only this year that's balanced because of the CARES Act money. So we do show the trend of continuous use of fund balance in the general fund beyond the current fiscal year.
Which would put us within the threshold, the 10 to 25.
Well, no, our forecast shows us below our target fund balance, actually.
Oh, out of the
Yeah. Mm-hmm. Yeah.
But that was the answer to Mr. Miller last year, right? When he was saying, oh, we had too high of a fund balance, but you explained that about the 5-year projections, so.
Correct. Mm-hmm.
Okay, Nate, go ahead.
Great. So the last piece that we have is the independent auditor's communication with those charged with governance. This letter is just kind of our standard letter that talks about what the responsibilities are in an audit. Talked about a lot of those things, if there's any, it's mostly, it talks about significant accounting estimates, significant accounting policies. If there were changes in accounting policies during the year that were significant, those would be disclosed here. If we had any significant difficulties during in dealing with Julie and Tony, we'd have to report those here. Happy to say we didn't have any difficulties, as always. We're also required to report any items that are misstatements, whether corrected or uncorrected. And so we did have, like we talked about, that yellow book finding. And so that this just references that finding. There were no past adjustments though in the current year. So sometimes in financial statements, there may be those adjustments that management decides not to record, and those would have to be reported, but there were none this year. Had no significant disagreements with management. We do include a copy of the representation letter to this. Ultimately, the letter that gets issued will include the final representation letter, which will have to be split in two. If we end up issuing the single audit separately, there will be two representation letters, one for the single audit and one for the financial audit. If management had decided to go out and have significant consultations outside of us, basically, if they were going out and talking to other auditors or anything, if there was some kind of disagreement, those are the types of things that you would end up seeing here. And there were no significant consultations. No other significant matters, findings. And then this talks about information like the supplementary information we talked about that was included in the financial statements. This section talks about is just, kind of our add-on. We add a section on upcoming changes in accounting standards, just so that everybody's aware of everything that's out there and is going to have an impact on the city and in the reporting for the city. We did have one item that came up related to payroll that we included as a management letter comment. And it related to one employee that the amount that was being paid didn't match what the union contract said. Again, it wasn't too high, so there was no kind of specific finding, but the internal control process that was in place didn't catch this change for this one individual. We're not aware of, and it didn't see any other individuals that were underpaid. But you can see management's response here in terms of any process change to make sure that that doesn't happen. So usually on the overpayments, you'd think, most employees pay super close attention. I'll tell you, it's much easier to deal with than those overpayments. I've had clients that have had overpayments. That's really hard to deal with. Trying to recollect money from employees that you've paid too much, because sometimes that's just not possible. But again, it's not something pervasive that we saw that we felt that it needed to rise to the level of significant deficiency or material weakness, but we did include that here as a comment. So I don't know if you wanted to add anything, Julie or Tony.
No, I think generally speaking, the management's response kind of covers our approach to the situation. We'll be sure to add the step once we get the information handed to us to ensure that the increases were processed properly.
Well, just to understand, how is it possible? I guess only one didn't see it. I would expect either like none or all would have seen this.
So it's, I guess the only thing I could say is I'm guessing the department responsible for this didn't take advantage of the HR, like our software program that I believe it allows for an increase across bargaining units and things. And I think they've had some trouble when they've tried to use some of the automated features of the program. But I have and will continue to encourage trying to use that, just running tests once it's done, or run it through a test database instead initially, and then review to see if it took properly. So being that it is just one, I can only speculate that they were doing them one by one, entering the increases one by one, which.
That's correct. They manually were processing.
is that true just for this department? I guess that would concern me if you're manually putting in everybody's salary increases for the year.
I don't think they did it just for the one department. I think it was for all. I can tell you, there's been some turnover in that department. The one of two people who might have been responsible for processing these increases, neither one is any longer with the city. Yeah, I'm not saying that that's not why, don't get me wrong, but it's hard to determine with certainty, what the approach was with both being gone. But I fully anticipate that the new individual who becomes responsible for that will be trained to have a different approach to those increases.
The next section then is just all the upcoming changes and standards. The next two that would have impact on the city or potential impact is GASB 84 will be required to be implemented next year. And then GASB 87 on leases is the next one coming up in fiscal year 22. Now it was 21 before. So that will be in fiscal year 22. If there's any significant leases for the city, there will be some fairly significant changes to how things are reported. And if you keep up on FASB standards, well, FASB standards weren't good enough for GASB, so they're slightly different than what the GASB determined. So, but those will be required to be reported in fiscal year 22. And if there is an impact, it will be something the city has to kind of keep an eye on, because you need to know ahead of time, because the changes could impact on how things are reported going into a fiscal year. So, while the implementation is until 2022, having an idea of those things and keeping those things in mind during that year, it just can't wait till audit. It's kind of one of those things. You'll need to be aware of that as the fiscal year starts.
And we are currently working on that now. So.
And then you can see we're talking about 84, we're all the way up to 97 are the standards that's out there, and there's more that are out there in draft form or through different parts of the process, and including one that, if you loved GASB 34 back in the day, that required the full accrual, this one coming up is going to have a pretty significant impact on how things are reported, like in the general fund, that kind of thing. We're still quite a few years out with the reporting with that, but it is coming down the pipeline. Probably, I want to say it's like 5-6 years, but it might be a little bit longer. So nothing can stay the same. And then last piece is there's a copy of the representation letter, the draft letter, what's expected to be provided by management to us at the conclusion of the audit. So, and at this point, we haven't included the section related to the single audit, because at least at this point in time, we're not sure whether that's going to be audited or going to be issued at the same time. So, that's all I specifically had tonight, but we'd be happy to answer any more questions that you have.
What would be the deadlines and timeframes then, when there's a final decision made on what's going to happen with the County CARES Act? I know the audit report, I think, is due by the end of the calendar year.
Yes.
We're would there be a wait to try and give some extra time for the county to make their determinations and their final conclusion on that?
So the deadline is to the state of Michigan for the financial statements is December 31st. I don't anticipate that the actual financial determination on how things are going to be recorded is going to take that long. I mean, I'm hoping we're working on that. We have the questions out. I'm hoping we can make that determination relatively soon. I was hoping we'd have it for tonight's meeting, but we haven't been able to get that response back. I fully expect that we'll be able to have that decision. We'll be able to meet the state's deadline for issuing the financial statement audit. If it ends up being that that amount is recorded, stays as it is shown in the report now, and we move forward, but we still have to wait on doing single audit procedures. It's all a matter of, we then would have to test the additional program if it is included, and would have to have some time for that. The due date on that is actually March 31st. You have 9 months to complete a single audit. Again, I don't think it would take that long as the feds actually come out with their guidance. So we'd probably need a couple of weeks to do the procedures, update the report, and get things issued. So I hope both will still be issued by the state deadline. The big question is now, can we get things in time so that we can get this report turned around and have a final for this city commission meeting is really what it comes down to at this point. And I'm going to be pushing hard to get an answer, but we're also dealing with the holidays and that type of thing. So.
And currently we're aiming for the December 7th meeting. There is another meeting in December. Is it the 21st or was it pushed to the 14th because of the holiday? 21st, Julie? Yep, okay. Oh, thanks. So, if need be, we would have that little bit of extra couple weeks that would help us to make sure that, we're able to get it approved and accepted by the commission and have no problem getting it to the state before the December 31 deadline. I just like to echo what Nate said. I do fully expect that the financial audit for sure will be issued by December 31st. In some cases, I believe, and Nate can confirm or deny this, but if we're just not able to get the information, say from the county or whoever it might be, we're able to use the best knowledge we have at that time to be able to make a determination. And so ultimately we can, even if we don't hear back, we can make a determination and move forward with the financial statements. Is that correct, Nate?
Yes, I believe so. It's one of those where that's the expectation of what we would have if we can't get a good answer back. I don't think that's going to be the case, but if we had to, we'd have to run it up our internal processes through our quality control, but I would expect we to be able to do that. I do know that, the state has been more flexible than most years. They haven't, we were dealing with this with our December year ends. We were in the midst of all of this and trying to, figure out, there were delays that were happening just because audits weren't able to happen in the normal time frame. And people were pushing the state to give an extension across the board. And they came back and said they weren't able to do that. They understood that they were accepting them more. It used to be pretty commonplace to get extensions. Now they don't really do it nearly as much, but they were granting those more than what they used to, but said they couldn't do it across the board just because the state law doesn't allow for that currently. So,
and the timing on those that you mentioned, so your December year ends, those were the ones that were due June 30th in the midst of the first round of our COVID.
correct. Yeah. So.
Well, so where does that leave us tonight in terms of what we can approve or can't approve, right? We don't have a final report typically that we would say we are approving and recommending the city council to accept, right? So what we have now is we could accept a draft dated this, with these assumptions in it. And if those assumptions are true, then it becomes final. But at this point, we don't know that, right?
Right. And I think the main goal and purpose of the committee is to, kind of do what we've done tonight and go in more in depth than what will be presented at the commission meeting, but to get the details on the goings on of the audit. And, we obviously regularly go through the high points or highlights of the financial statements as well. And so I think, from that perspective, the committee was still able to fulfill that purpose. And I'm not saying that this is what it must be. I think I'm just saying my perspective of what the intent of this would be. So I don't know exactly how the, I guess the final reference of, what you're approving or whatever, what we want that to be. But I think it could still proceed with a vote, approving, or with the recommendation for the city to approve, and maybe contingent on the final decision on the county revenue or something to that effect.
Well, the statement that we would normally make, would say, we accept the comprehensive annual, the CAFR, the single audit, and the management letter as submitted, and recommend the city commission accept it as well. But what we have is a draft, right? We've got a check written in pencil.
And it always was a draft. It's just that this draft is subject to change, whereas in years past, the draft as presented at this meeting was anticipated to, and typically did turn out to be a final. And yeah, obviously we don't know this one for sure, but yeah, it has to stay a draft because nobody has, accepted it. The commission has not accepted it. So until that happens, it will be a draft, but your point is taken.
Yeah, that's why I kind of started out that about, what's our end game tonight with this, little piece of uncertainty in there. So what we could potentially do, one suggestion is we accept the CAFR that was an audit management letter that were reviewed tonight, right? But if that changes, then how do we handle the also approval of those changes?
Well, and I think that ultimately it's a recommendation to the commission that they accept it. So for that reason, I would think that you still could recommend that they accept, as presented as well, or, if determined by the auditors that, it needs to be amended for that federal revenue via the county, that, you could potentially recommend either or, that the commission accept either or. I don't know if maybe Mayor Fournier has what he would like to see as a, for the commission purposes, if that would be something that would be desirable, or if someone or him or anyone else on the committee would desire to have another meeting scheduled. I guess I'm not sure. I guess I'm looking for direction.
Yeah, I mean, I guess historically with other items, and I can't speak from any sort of regulation or requirements of law, but certainly we've done things conditionally before, as long as they're known and we know exactly how it's going to change and we know specifically what outcome A and what outcome B could be. I think that's acceptable to us. And we know, that it's not, I think those sort of things can happen. And I think you probably get the confidence of the commission, because if it's a matter of, just time, we can conditionally approve things.
So the thought would be then that we approve the material that was presented tonight with the understanding that there may be a changes required depending upon the guidance from the state, right? Or is it the feds that the guidance needs to come from? And to the commission, then we say, as a committee, this is what we've reviewed. However, the commission must be informed if there are any changes due to that new guidance. Right, we have to somehow put that mechanism in that's going to drive that re-review or re-look at if something changes from this. I mean, I don't feel comfortable proving this and say, yeah, it probably won't change. Don't worry about it too much.
Well, and I don't think we would even say it probably won't. I think at this point, it's still kind of 50-50 almost as to whether or not it's going to come back that we should not accrue the revenue. With so much of this CARES Act dollars, a lot of the direction was ever changing, and right up until now. So I think even the county had changed their approach, because during an early webinar they said, oh yeah, you can request payroll through September 30th, or maybe even December 30th, Julie. And then so that was our approach. And then, like I said, during the audit was when they actually said, oh no, for the way that they specified was for the public safety payroll, it should not be later than June 30th. So it was, it was ever changing. So I don't think we can say it probably won't, but I think that, I guess what I was saying was that it was reviewed here and specifically pointed out as to what numbers would potentially change and why they might change. And so, I mean, it's completely up to you, but if you in the committee, if you think it would be appropriate or acceptable to recommend the commission accept as is, or with that modification, if the auditors come back and say that it's necessary.
Yeah, so this doesn't, in the big picture, it doesn't impact our financial position, right? It's whether it's put in last year or this year's.
Exactly. I mean,
right. I mean, at the end of the day,
it's how you book it.
Which year we're going to record it in.
Right. And as you said, our responsibility as a committee is to review the audit. The numbers are, we don't really review the budget numbers, right? The actual numbers in the CAFR. We review the audit that was done to say that the audit was done properly and to our satisfaction. Right. Yeah.
And, the findings we got, we kind of got into those a little deeper. So yeah, all those things so that, it doesn't make a commission meeting that would typically take 2 or 3 hours, 3 or 4 or 5 hours instead or something. So we can break it out here.
My thought was there's 2 possibilities. We've been presented with both of the options. And depending on which is the actual decision made from the county, we'll know that in the future. But either way, both of the options wouldn't cause, or neither of the options would cause me to not recommend the commission approve the audit.
Yeah, I do agree with that.
Okay, yeah, that's kind of what I was heading at. I think, once I talked it through myself, that, like you said, it doesn't affect the audit. It affects the numbers for last year and this year, but the audit, the procedure, the standards being followed are sound, and that's what we're reviewing essentially, right?
Now,
Right.
I think the one caveat would be if, and it would be related to the single audit only, once that is determined, if the CARES grant needs to be audited as part of this year's single audit or next year's single audit, if there were any findings related to that, then I think that would be something that we would want to
Reconvene.
So that would be my one one thing, just to want to maybe have a quick conversation on what would be the procedure for if this was included as a major program in the single audit. Would there be a follow-up, just a quick meeting to present that? And then would the single audit need to be approved by this committee and sent to the commission?
I think historically the single audit was not included in the wording. And then I think just within the last couple of years, might have been Mr. Mayton who brought it up that, we're going over it. It might as well be included in the recommendation to accept it. That's not to say, I do think it's good practice to go over it and acknowledge that, that was reviewed as well. So just as far as, if there is a single audit on these dollars and there's some sort of finding, that I would say, I will be communicating that either way to this group. If there is one, I would say you would probably almost certainly want to have a meeting to review that. And beyond that, I guess I'll just leave it up to you all.
Okay, so I'm thinking now is that we would make a motion to accept the comprehensive annual report, the single audit and the management letter as submitted, and recommend the City Commission accept this as well. The auditing of the CARES Act funding remains an open issue that must be resolved. Just include that in our resolution.
Yeah, sounds appropriate to me.
Well, I think it gives it the appropriate level of bringing it forward without holding things up. Right, I think we have to have visibility, but not bog things down. So,
would we want to include the single audit in that wording?
So just take the single audit out, like we used to always do. Say we accept the CAFR and the management letter is submitted.
And you could even have the yellow book report, which is where the finding on the audit entry that took place was. The yellow book report's usually included in the single audit, so we usually wouldn't reference it separately. But because the single audit's up in the air, that's why we reviewed it outside of there. So that'd be up to you, but I'm just, if you'd like.
Well, and that was the reason we put the single audit into this, is so that if there was a finding that was before, there was things like for block grant dollars or
there was a couple
little things like that. We just wanted to make sure that they got noted as being issues, and and move on. So I think we definitely should need to report any of the findings and the fact it's been resolved. So I think we would have to include the what do we call that? It's actually the independent audit report on internal control. Yellow book's probably not technical enough to put in minutes, right?
Nate.
It's probably the independent auditors report on internal. Well, if you want the long version, it's about 20-25 words. But yeah, it's the independent auditors report on internal control.
And
Yeah.
Nate, just for, I guess, clarity, as of now, where the single audit stands, obviously, the block grant was the only major program tested at this point. Just want to make sure that everyone's aware of, if it was a single audit issued today, there are not any findings currently.
To my, correct. I'm not aware of any findings related to that program. I mean, we haven't finalized our single audit process. It hasn't gone through a review process because it's up in the air. So no guarantees, but I'm not expecting anything. Everything, to my knowledge, it's been reviewed by the senior manager and all that kind of stuff. And there's there were no indications of any kind of findings. That payroll issue was something technically that came up, but it wasn't determined to be a compliance issue. So, which is the focus of that testing.
Yeah, and I think from my perspective, I think that the single audit on block grant otherwise went smoothly. So,
Correct.
and again, just for I guess to follow up, to close the loop, I will be communicating, what we end up hearing from the county. I will certainly pass along the final single audit, whether, we end up having to do, have another major program with the CARES Act dollars or not. So we'll certainly be passing along to the committee.
So is it fair to say that a single audit cannot be finalized until the CARES Act funding is taken care of, or guidance?
Yeah, that determination will be step one. Even if we get that determination tomorrow, they still have, if the determination ends up being that revenue needs to be accrued and that we basically are saying we received CARES Act dollars in fiscal year 20, they will still need the guidance to be issued, which it's already missed, I think, 2 targets that the Fed notified everybody that was going to be their target, and they were not able to fulfill. And that's that's been the trend whenever they've updated their guidance. It's always been delayed. So that'd be the one caveat that might cause the single audit to go past, to not be presented with the CAFR regardless. If they're not able to test it, then that would potentially be a later date than year end. Calendar year end, I guess.
Okay, so that if we said, do we accept the CAFR, the independent audit report on internal control over financial reporting, and the management letter as submitted and reviewed at this meeting, and recommend the city commission accept as well? And then let's say then the audit, final submission of the single audit depends on the handling of the CARES Act dollars. Whether it's at a future date or whether you have that information ready by December 7th, right?
Yeah. Sounds good.
Because then we'll have met our obligation, and also if the caveat would be taken away if that single audit's all ready to go by then.
Exactly. Right? Yep.
Okay, so can I have that motion then to accept the comprehensive annual financial report, the management letter, and the independent auditor's report on internal controls over financial reporting? And as reviewed as, approved as submitted and reviewed tonight, and recommend the city commission accept.
I will motion that.
Okay,
I will second that.
all right. Any other discussion? I think we've had it. Okay, all in favor, say aye, raise your hand.
Aye.
So it's 4-0. That is passed. The next agenda item then is other business or any other draft recommendations by the committee? Is there any other thing anybody would like to bring up? Okay, so just, I think we've already said it, this will be presented to the city commission on December 7th then, is the plan?
Yes, the one thing that could delay it to the 21st is just if we can't get a response that, I guess if Raymond's not able to help us determine at that point due to, the communication that they're waiting on, where this revenue, what fiscal year this revenue needs to go in.
Okay,
It'll still be the 7th, but yeah, it could last until the 21st.
okay. And all the commission meetings are still virtual? You haven't broken in that brand new meeting room yet?
Yeah.
Waiting for the day, huh? And the way things are going, I'm sure nobody's gonna open it up before the new year, so.
No.
Okay, if nothing else, make a motion to adjourn. All in favor?
I think we typically do have a specific support on that too, so if someone could.
Somebody want to support the adjournment?
All right, thank you.
Okay, well, everybody have a happy Thanksgiving.
You too.
Yes.
We decided to spend ours up north, even though I don't have any pull on getting my boat in the water like some people, but everything's out of the water now.
The ice, John.
No, the ice is occasionally starting already up here. We're far enough north, so. No, it's deer. I just have to worry about the deer hunters right now. The deer running away from the hunters. All right, everybody, thanks a lot.
Thank you.
All right,
Thank you.
Good night. Thank you.
Good night.
Bye.